StockTwits Nation. It is Thursday, September 11th. This is the Daily Rip Live. Joining me today, once again, a three-peat, is the one and only Olivia Vosnenko, aka Voz. Good morning, Voz.
Good morning. I like this nickname better than the vase.
Yeah, the Voz. You know, we'll land on something. I wish I had a cool way to do my name for obvious reasons. We've also got Bret Kenwell, familiar face here on the show. He is investment and options analyst at eToro. And he has some hot off the press platform data about how retail investors are feeling heading into the back half of the month. So as you guys know, we're gonna jump around a bit. We have some headlines to share, some news out of Klarna's IPO, big news from Opendoor. Bret has some insights, and Voz has been finding us some gems, setups to follow. So we're gonna kind of hop between those things. But as always, chat's open. Drop in any topics or tickers you'd like us to cover, and we'll do our best to get to everything there. But real quick, Bret, how have you been? I haven't seen you in a few weeks.
I've been doing great.
Good.
Just kind of enjoying the last little bits of summer, I feel like.
Yes, it is. There's a chill in the air in New York. I don't think anyone's mad about that. It was kind of a gross one. But really, really curious to kind of hear your take on what's going on in the markets and what you're seeing, because it's been a dramatic summer for retail investors in many regards. So we'll get into all of that. Before we get into the markets, a note on the broader news: conservative activist Charlie Kirk was assassinated while speaking at Utah yesterday. Authorities are searching for the shooter. Leaders across the political spectrum, business leaders alike, condemning the violence. So we'll continue to follow for updates. For now, though, let's stick to some business headlines. And the big news out of yesterday afternoon is Opendoor finally getting their heir apparent. So if you guys have been following the show, Eric Jackson, who's the activist investor sort of leading this charge, has been clamoring for new leadership. He was instrumental in sort of rallying retail investors to oust the former CEO. So they just finally announced a shakeup in their leadership. The stock went pretty wild. They named Kaz Nejadian, who was Shopify's former COO, as CEO. People in the tech industry very much respect how Shopify runs its business. It's obviously been a successful platform, both in terms of its core products, and I would say they're a leader in understanding and connecting with retail investors, which I think is an important note for this stock. In other news, co-founder Keith Rabois is back as chairman, and fellow co-founder Eric Wu is rejoining the board. So this is all after Carrie Wheeler was pushed out last month. Felt like a long time ago. A lot has happened in 1 month. But shares of Opendoor jumped 36% after hours, and they're up more than 15-fold since June. Bret, I want to start with you because this seems to be the retail darling of the summer. We've had Eric on, we've had other people, we've talked about this from a technical standpoint. From a platform perspective on eToro, do you think this Opendoor movement is sort of shifting a new era for retail activism?
Yeah, I mean, I think it's funny because I think Wall Street still sort of underestimates the retail investor in terms of not just not just like their ability to jump in and out of stocks or be active, I guess, but sort of to be on the right side of the trade. And it's not saying that retail bats 1,000, of course. They make their mistakes just like everybody else does. But you know, it just really stuck out to me, and this is kind of a specific data point. But going back to last Friday, when it was kind of a tough day in the market, we had a lot of volatility. I think we hit record highs and then pulled in pretty quick. But I was going through some of our data for that week, and Opendoor was one of our top traded stocks on the platform. And to me, Open had a great week. So it shows to me that again, that's a hyper specific time frame and example, but it just shows to me that retail they're focused on what's moving. They're drawn to sort of what's active, and in many of these cases, it can have a really good outcome for them. At the same time, they do also, they are active in the broader market in the sense of what else is moving, like a lot of the precious metal ETFs have been another place where they've been going to these, especially these last few days with gold and silver making such strong moves. But to stay specifically on your example with Opendoor, yeah, I mean, this has been a place for retail to find a lot of opportunity this summer. The stock has been on an absolute tear. Today's sort of that cherry on top type of feeling for those who are still involved with it. And yeah, I think it just speaks to retail's willingness to sort of take on that added risk. And today's a day where they're reaping the rewards.
Yeah, it feels different just as an observer of the conversations going on in the market on X, other places. Obviously, the social platforms like eToro and others have ways to chat within the apps as well as stock to it. So just being able to see all of those from my vantage point, and I'm curious what you think, Brett. The tenor of conversations has shifted. If you compare it with a GameStop, I remember GameStop. It was a lot of rocket memes, just like photos, gifs, lightning bolts, flames. The tenor of conversations I see around Opendoor are a little more around ideas for the business, ideas about leadership, some more informed than others, but there seems to be more substance there. And I'm curious, do you think this reflects a maturation of sort of your average retail investor?
Yeah, definitely. And to your point, I see that all over various in social media, like investment platforms. Like whether eToro's specific, like you said, we have a feed in within the platform. It looks very similar to like a stock twits or a Twitter, and you can see investors' whole theses like laid out right there, and just like you kind of on stock twits, and you post charts, take polls. And it's really interesting to sort of see, like you said, back in the GameStop and AMC days, it was just sort of this idea that we're trying to squeeze these names and sort of have this Wall Street revolution. Whereas now you're getting a lot of retail investors who are really taking a a hypothesis. They're looking at the numbers. They're looking at the company's prospects, and they're piecing together where there could be these big opportunities. They do still tend to be in some of these volatile names, but I do think you start to see a little bit more of that maturity and that more sophisticated type of analysis work that you're seeing with these stocks. But I think social media plays a big role in these. I mean, it's so much easier now to get these ideas put right in front of you from people that from people that you trust. Even shows like this puts things like open on the radar for a lot of retail investors. So I think it's just having kind of access to those ideas that sort of help spur the inspiration to be involved.
Yeah, I want to get your take, Voss, from a trader point of view. You mentioned yesterday picking up an idea. I think it was VFC from a not a colleague, but somebody you trust on X. I'm curious for you because you've talked before about kind of getting inspiration from a lot of different places, and you're sort of always eyes wide open. What the role of social is for you as you're kind of digging into what moves you're going to make day to day.
Well, with something like Open, instead of rocket memes, I think now we have a bunch of puns. So the puns have taken over with Open. We're opening up 35% higher, buy to open,
Yeah.
literally. It's
Yeah.
opening lots of opportunities. So that's kind of what I'm seeing
Yeah.
with people who have been following the explosions in stocks like this. This has been a solid chart. I would
Yeah.
not label this a meme stock whatsoever. I know it kind of had that moniker, but it's really not. I'm just going to show my screen. This is a solid breakout and Open, and yeah, you had a nice run higher, bull flag breakout, bull flag breakout. This is going to draw that so you can see it. You can call it hockey sticks or bull flags, whatever you want. This is all adding up to a solid straight up chart. When you have stocks that trade into the fives and now you're getting over 750, this stock is going to go to 10, 12 in the near future.
And Vaz, for people at home, when you're looking at these patterns and movements in the chart, and you say this looks like it's going to keep going up, what would you or what would someone be looking for to understand when that tide might be turning based on chart data?
When you'll start to see the stock roll over.
Yeah.
So what I like to look for, and that's where I follow volume on each of these consolidations. So as long as you have these peaks within the consolidations, and I'm just looking at volume down here, you had this cluster that showed traders are still interested as it's consolidating. So usually that will give the path to least resistance, that boost to the upside. So as long as the volume is there, as simple as it is, you don't need to make it complicated. That means participation will be there.
Right. So that top piece starts diminishing, and that's when it's like, okay, I think you think maybe there could be a turnover.
Exactly. As
Okay.
long as they have these quick pops up, it's good to me.
Interesting. You made an interesting point, Vaz, on calling it not necessarily a meme stock anymore. And I think Eric Jackson made a similar point on another show a few days ago. He was saying we're a cult stock, not a meme stock. And I think there are differences there, but cults, have at least fundamental things they believe in. There's a leader. A meme is sort of like we're all in this movement, we're pushing it. So it does sort of feel like it has that stickiness now. So we'll continue to watch this. I think their COO, the former COO of Shopify, he's pretty well known in the tech world. I think people are pretty excited about the company picking him up. And so we'll see. We'll see what happens with them, and we'll keep following them. I want to shift over to some breaking macro news from this morning. Consumer prices rose 0.4% in August, pushing the annual CPI to 2.9%. This was the highest since January. Core CPI, and that's the one that strips out food and energy, climbed 0.3% on the month. That's up 3.1% year over year, right in line with forecasts. At the same time, we also got weekly jobless claims jumping to 263K. That is above expectations. So we continue to see weakness in the jobs market data. And this, of course, follows yesterday's producer price index surprise decline. And we're all waiting with bated breath for the FOMC meeting, even though the prediction markets have that pretty much as a lock on we're going to get a cut in interest rates. And most people thinking that's going to stick to the 25 bips. Bret, this meeting has been very much anticipated for next week. Macro data rolling in lately, a lot of conversations among investors around what that could mean. Within the eToro community, how do retail investors typically react to these sort of readouts? Are they sort of a slow drip over time that leads to sort of vibe or mentality, or are there sort of more knee-jerk reactions taking place as they come out?
That's a good question. I think retail is very similar to, I think, how the overall market would start to position for things like this. So, like, specifically with the Fed rate cut, there's been so much discussion about it this last, really all summer, but really these last few weeks now that we've gotten some of these more recent labor figures. And now it feels, pretty confident to say the Fed will cut rates later this month, next week. And retail knows that. Retail feels that that's coming, and they're going to start positioning accordingly, into the sectors and stocks that they feel are going to benefit from those lower rates. But at the same time, I think this kind of goes broadly to Wall Street as well. It's not just retail investors or eToro users, but I think there's just sort of this balance that investors are trying to make between how weak is too weak in terms of the jobs market. How much some weakness. I mean, we have some weakness now, so you can argue whether it's a good thing or a bad thing, but regardless, it's there, and it should lead to lower rates. There's a lot of debate around how inflation and the labor market are kind of working against the Fed on both sides of the equation there. So it's how they're going to respond is sort of in question. But um, you know, at what point is a material weakness in the labor market going to affect the stock market? Because for now, we continue to just knock out new high after new high, and I think sometimes that sort of lulls investors into a bit of safety. You just think every dip is going to bounce back to all-time highs, and we've sort of seen that these last 6 weeks of summer, where we get these little 2, 3, 4% pullbacks off the high, and then we go right back to the upside, even though we haven't really gone anywhere, in a while. So I don't know, maybe as we kind of get into the September, October phase, I think kind of everyone's a little bit anxious, isn't probably the right word, but a little guarded that we could see some sort of like real shake of the tree, something in that 5 to 10% pullback range. But so far we just have not seen it. It'll be curious to see how it goes after the Fed's meeting next week.
Yeah, in the data that you view, we've had guests on the past talk about specific signals they look for in aggregate to determine if the environment's moving more risk off. What would you kind of pick up on in what you see in eToro data or just in general on the market that would show sort of shifting back into a place of caution?
So this is sort of I don't know that like analytically I would have the data to say this, but
Hmm.
from sort of like how I look at what retail's doing, I think that they have this mentality where they have what they feel is a safe, passive, um, sort of like just a consistent type of allocation to markets. And for some investors, that's going to be their 401k, IRA, something they're committing to for decades, decades into the future. They can contribute to it every 2 weeks, every month. And then for some investors, it'll be a regular taxable brokerage account, but they're investing in, the blue chip type ETFs or blue chip even like tech names like Microsoft, something like a safe name that you feel confident in for the long term, or like Vu Spy, if sort of the S&P ETFs. But then they have that sliver of really risk on where they're in those volatile names, something like an Opendoor, something like some of the AI names that have been making some of these big moves. They go. They have this little sliver of their portfolio, I think, that they like to take
Hmm.
advantage of, and really, I don't know if it's just a risk reward thing, or for some of them. Others it's probably kind of an emotional,
Yep.
they love the rush. But I think we still see that dynamic playing out. Like we talked 10 minutes ago about seeing Opendoor as one of the top traded names last week, but we also saw those sort of the regular routine safe allocation plays
Yeah.
in equity markets. So I think investors still have that approach, and in a way it kind of positions them for that shakeout. If we do see it, they already feel comfortable, I think, where how they're allocating.
Yeah, I think that's a good point. People aren't looking at their portfolio as they look at certain parts of their portfolio safer than others, and they know that one pocket might be a little more wobbly. And to your point, the precious metals over here, and then the open door over there. Vaz, I know we talked earlier this week about sort of how you think about some of these macro news drops, and I'm curious kind of what your game plan or kind of how you strategize ahead of, okay, we know this Fed meeting's coming. We know that there's going to be an announcement likely. We think we know what's going to be announced. As a day trader, how do you, in the days before, is there any way you sort of prep for this in advance to be able to take advantage? Or is it you need to wait and see what's transpiring and act in real time?
Well, to Brett's point, it does feel like even though the market has been directionally higher, it does feel like it hasn't really gone anywhere because any type of move that you make up, it seems like it quickly gives it back. So while we are trading at all-time highs, to me, it seems like we're kind of curving out here and we need some sort of catalyst to have that dramatic move up or down. Obviously, the data this week has been inline PPI, CPI. So you're seeing kind of like a slow reaction this morning, which is great as a day trader because then there's pockets to go higher with zero DTE or lower, depending on how you like to do your analysis. I'm interested, and everyone's looking forward to FOMC. It's not what they're going to do. They're going to obviously cut rates according to predictable data, but I want to see what Jerome Powell says. That is going to be the market driver, and you can, after that is released, he can absolutely send this market into a implosion lower, and then we'll have that gap down the next day, that gap down follow through, or he'll support what they do, and there's not going to be any sort of outlier that freaks the market out, and we'll just continue this slow trek higher until there's a different type of breakout or breakdown news.
Yeah, you're right on the qualitative aspect. The sort of the story behind this story. I'm curious if you're hearing anything in your pockets of the internet or discords, even within other traders, what they think he's going to do. I remember his commentary when he last spoke was fairly muted and subdued. He didn't really say much, which I think there's sort of a very level reaction to. But what are people? Are you hearing anything from anyone what they think he might say or do, or is it always sort of a toss up?
It really depends if he wears a purple tie. I think that's what it boils down to.
Wait,
The
what does the
briefcase is
purple tie
retired.
mean? Explain.
It means that he's going to cut rates, right?
Okay. Oh, he's like
it means he's dovish.
he's like Taylor Swift with the Easter eggs.
Exactly.
Okay.
It's the
Wow.
literally, it's purple.
Oh,
Yeah. I mean, as far as betting on that, it's
yeah,
it's
who
anyone's
knows?
guess. He has to be in the hot seat and the market digests and the algorithms digest. And then when he walks away, we'll see if the mice will play or they'll run away.
Love it. The cat's
Mhm.
away, the mice will play.
Yeah.
I don't know who the cat is in this situation, but felt the need to throw that in. Let's turn to the IPO markets real quick because we had Klarna make a debut on Wall Street. So Klarna is known as BNPL, that's buy now, pay later competitor. They are out of the Nordics, I believe. They had tried to get out in the public markets a couple times and they had some setbacks and they got stalled. Finally got out there. They're interesting because we talk about a firm on this show a lot as a BNPL player, slightly different model than a firm. Klarna is also trying to sort of expand to become a neobank. So I think the way to think about them is not just they're going up against in a firm, but also a Chime and other offerings like that. But shares of the Swedish platform surged 30% on opening day, valuing the company at nearly 20 billion. Their CEO saying the momentum reflects a growing shift in the US, where 1 in 5 households see credit cards as, quote, a product of the devil. That is quite the line. So Klarna is, of course, pitching fixed installments, no interest. We've all seen the logo on various websites. And they also want to, of course, win over the merchants with cheaper costs in that marketplace model. They got to get the merchants on board and then they got to get the consumer adoption. So they have a 5 million person wait list for their debit card, though. So keep an eye on sort of that competitive product they have going with Chime and other banks. Another interesting call out for this IPO was that Klarna actually let their staff sell vested RSUs during the IPO window. So usually, in the case of other major IPOs, we've seen employees need to wait 6 months for a lockup before they can sell. Employees are able to freely share until September 30th and then only in quarterly windows. So good news for some of those employees that have been sticking it out for years waiting for this to happen. But Bret, I want to quickly pivot to you on IPOs in general. I mean, we've had some big ones this year. Is the momentum, is it still there? Is it growing? Is it about the same? What do you think retail's appetite is for IPOs in this moment?
I mean, I think retail's appetite is always just, it's always fairly strong as long as they feel that there is an opportunity there. This year's IPO market is certainly skewed, maybe not the right word. I don't know. It's certainly been impacted, I'll say, by the first half of the year, just in terms of the events that transpired with the tariffs and a lot of the market volatility that we saw, really threw kind of a wrench into the IPO market. And it's not something, usually a strong IPO market is a hallmark of a strong bull market. And, we don't necessarily have that component this year. It's not to say the IPO market's been bad. We just have not had the same number of issues, new issues that we typically do in a strong year. And you can argue the other side of that too. Too many IPOs and too many companies coming to market like we saw in 2021. That can be an issue too, where you sort of have this bubbly type of environment. We don't really want that. But overall, I mean, it's been a fairly strong IPO market in terms of the appetite for the names that are coming public. You see a lot of these firms pricing above the initial range and then opening above that range. And in some cases, something like a Circle really, really took off after its IPO. So, I mean, I think that's pretty indicative of healthy appetite and healthy demand for these names.
And then on a platform like yours, without getting into sort of the raw numbers, but on a IPO day that's significant enough, call it a Circle or perhaps a Klarna, maybe not. Is that typically the number one traded thing on your platform for that trading day, and then it sort of evens out?
Yeah, it really depends. Top traded, it would be in the top traded, sort of in the hierarchy of it. But to get to the top spot is pretty tough to displace, some of those top 5, top 10
Yeah.
firms. But yeah, it'll climb up the ladder for sure.
All right. Well, we'll continue to watch IPOs. I know Gemini, the crypto exchange, has some plans. StubHub also making moves. Not investment advice, but I've given this company so much money. I feel like I should just be I should be on the board at this point. But that's another one to watch. Vaz, we've never talked specifically about kind of how you play IPOs and how you view them as a trader. So curious, like when you're seeing kind of the news that some of these companies are ready to go out and setting the date, is this a place that you look into to make a move on the opening day, or do you tend to like to wait it out and see how the chart takes shape from there?
I like to wait it out because the theme of the week is don't get stuck in the wick, which a lot of both advanced and noob traders will do, because you see that rush and it's really exciting. And then you buy at the highs and you get trapped. And this is a place you do not want to be. I will troll you. Okay. I will. I'll be at my 3 p.m. is my witching hour. I will be there if you're but joking aside, listen, guys, I've been in it too. What I like to do on an IPO stock, you want to wait until it retakes the open, and usually that will help it squeeze. That I will allow the degenerates, and I will jump in there with you to possibly take a trade in this stock. Other than that, it's not my problem.
Vaz, I feel like you could set up an online store that's like Vaz's Wicks. Don't get caught in Vaz's Wicks, and like would sell candles. And they could be like,
and tarot cards.
yeah, I feel like people would get all over that. Let us know in the comments if you would buy
Okay,
Vaz's
thanks.
candles.
I'll use Klarna to get a loan.
Yeah.
Or lay away my Birkin bag. I don't know. Either case.
Either or. You can buy anything with those BNPLs. I got an ad on Instagram for like a $10,000 watch, and it was like buy now, pay later, and I was like, oh wow, we're doing that. We are doing
$1 an hour. What?
I know.
What a deal, honey. Do you hear that?
It's funny because that's how I justify big purchases anyway. I'm like, well, if I wear it, 200 times, it's only. We all have our ways of coping.
It owes me.
Exactly. Yeah, I'm making money on this thing. Brent, let's zoom out a little bit on some of the other data I know you've been looking at. And let's talk about tech, because big week for tech. Apple had their iPhone 17 event. Unfortunately for them, on the same day as a lot of other events going on this week, and they didn't really wow investors as much as people expected they would. But when we look at your Apple, your Amazon, Microsoft, Mag 7, what is the Mag 7? Is it losing its luster at all among retail investors? Are they moving to more of the AI trades? Or kind of help us size up kind of what the state of the Mag 7 is coming into the final quarter of the year?
Sure. It's been it's been kind of a weird run for tech. Usually, and I include myself in this, but I always kind of look, if the market's up, I always assume tech is up, right? Because it's just command and such a big weighting in the indices. Like tech is almost a third of the S&P 500. So anytime like the market's doing well, it's on a nice run, I always assume tech's doing well. And that's not always the case. This is a little bit kind of older data, but like when we look at Q3 of last year through Q1 of this year, so basically the last 6 months, and then up to the first 3 months of this year, tech was the worst performing sector in the S&P 500. Period. And I wouldn't expect that without seeing the market absolutely decimated. And at the Q1 lows, it was pretty decimated. But since then, there's our open. Since then, tech's been a phenomenal performance and very, very strong. We've seen that whether it's smaller semiconductor names, something like even like an AMD really roaring off the lows, or the names we know so well, the Mag 7 names, so your NVIDIAs, your Microsofts, they've played such a huge role in this rebound. And when it comes to the retail investor, they remain pretty adamant that this group is going to do well. And our latest, so we just did a survey with them August 5th through the 19th. So a recent summer survey. And they said that tech was the place that they were most likely to increase their investments. That was followed by financials, and then energy, I believe, was the third one. But specifically within that Mag 7 group, Amazon was sort of the consensus favorite, whether it's Gen Z, whether that was with our boomer respondents. Amazon was the favorite, Apple was the second favorite, and then Microsoft was the third. So and I believe year over year, those were the same responses last year too. So they really kind of stuck to their guns on these three. Two of them have paid off really well. Amazon's done pretty well over the last few months, and then Microsoft's done phenomenal. But Apple's been sort of stuck in the mud. And like you said, with this latest iPhone event, I feel like go back 10 years ago, this was like the event
Yeah.
of the week, if not maybe of the month. Like it was the thing. And now I kind of feel like it's just sort of like an afterthought. I've like NVIDIA's GTC conferences, I think, take, the crown for big tech events now.
Yep. Yeah, it's interesting also to see sort of consistency in the tech names people are watching, like to your data, but also sort of rotations around who's getting the buzz and the headlines. And obviously this week we had Oracle, which I think among younger investors, like this is an OG. This is a not dinosaur. This company's been around. Oracle's not usually when you're
Kind
talking.
of dinosaur though.
Yeah, when Larry Ellison, we were saying he's 81 years old. He's been doing the thing. He just I don't want to say he under the radar came up to surpass Elon, although Elon leapfrogged him again. But this isn't one, if you looked at like Reddit data or probably even platform data on eToro, Oracle's not something people are talking about day to day. I'm curious with kind of what we're seeing there with sort of how some of these companies are taking a more bigger role in AI. Do you think there's sort of the rankings of what's interesting among that tier is shifting at all, Brett?
Yeah, that's like such a curious conversation point, especially when you start to see like, Oracle with just an absolutely huge move yesterday after already having really big moves ahead of this report. I know that move took me by surprise without a doubt. And then you see something even like Broadcom now, it's like very quickly knocking on the door of $2 trillion. So you have like these names that are garnering valuations that 10 years ago you would have thought there's no way we're going to see a market cap like that, and especially not from, Oracle. No one was giving Oracle any credit for anything, even more recently than that.
Yeah.
But even and Broadcom too. I think that's a name that really flies. It's hard to say it flies under the radar because it's worth so much money. Like
It
it's
does though,
1.75, but
it does.
yeah, like
It's Broadcom. Like that sounds like it's from 1993. And it
yeah, well,
is. That's
exactly. It does it with NVIDIA in the way it flies under the radar, I think. So it is interesting. I wonder if we'll start to see like the Magnificent Seven. Will it be the Magnificent Nine?
yeah. The tech stuff's interesting to me because it's this rotation of what people are chasing. I remember last time Oracle was in the headlines this much, people were saying they're going to buy TikTok or bring TikTok to the US. I don't know what happened with that conversation, but maybe that's back in play now. Vaz, are you like on the tech side? Are you any tech charts or anything you're looking at specific within that category, whether it's sort of an index or a specific company? Are you seeing anything interesting in tech?
Well, when you bring up stocks like Oracle and Broadcom, these are obviously very expensive stocks. So while they are kind of, you know, under the radar, they've just been, they're expensive. So I think that traders are looking for something that is set to make the track that Oracle or Broadcom has done in the past decade. So I think that that's my viewpoint on it.
Yeah, so littler guys, the newer opportunities,
Yeah,
maybe. Yeah,
the little guys.
give some love to the little guys.
Yeah, exactly.
Larry Ellison's got enough yachts. I look forward to continuing to watch those two just keep completely. And then Jeff Bezos is now, no one even cares. He's poor now apparently. Um, Brett, let's go back to your data really quickly. I'm curious. You mentioned the precious metals ETFs like stuck in my brain because it is something like people don't just like go to a bar and be like, "Hey, you find any good precious metal ETF?" Like, but it is happening. Are there any other sort of nuggets in the data that might surprise people or might be things that we're not seeing on our feeds, but you're seeing kind of in the aggregate platform data available on eToro?
Anything that kind of jumps out, I think it just kind of goes back to this idea that retail, they're an opportunistic bunch. It can be something that maybe it's a short term, type of a stock that's just active on the in terms of volume wise, a very active name, and they see an opportunity and they jump in, and it's a couple day, it's a rental. It's just a trade for them. It's not a lifestyle change. But then there's other cases like where you do see something like a gold where it's had a very strong, it's had a strong year. It's up, almost 40% in 2025, and it had that really explosive couple months. And then it went nowhere for like the entire summer, really, until this, like, past 4 weeks or so. It's really started to catch a lift. And then you see retail come back. It's like they were involved and then it kind of sat quietly and then they get re-involved once they start to see a catalyst, once they see, like in this case, a breakout to record highs. I think drew them back in, and they drew them in all different ways. Some people were going into the like GDXs, like the gold miners. Some were going straight into GLD and just playing right on the metal. But I think it just kind of reiterates that they tend to be an opportunistic bunch. I think when you look at the way April played out, when we had that extreme volatility in those first few days, retail was the one that jumped in. Like for us, um, our highest day of buy side volume came on April 7th, which is the day that that S&P bottomed. So,
Yeah.
and retail, there's many reports, not just our report. There's a lot of reports, like JP Morgan had great data on retail buying the dip in April and May. I mean, they're the ones that take advantage of the pullbacks. And sometimes their timing's a little off and they take some short-term pain, but they're ones that will jump in when they think there's a chance.
Yeah. Vaz, I want to go over back to you also, because I know you brought up a few new ideas you had this week. I would love to check in on some of those. I know you had VFC. We talked about Timberland. There was ASST. I'm not going to say AST anymore, even though that was really fun to do for one day. What? Let's check in on some of the stuff you've been tracking. Has anything evolved or changed? Anything new you've seen? Curious, sort of what's been piquing your interest over there.
Sure. I am still orbiting around ONDS. This is one that had an offering that they did not abuse this stock for doing that. Usually you will see the momentum just get sucked out. I'm going to share my screen, I promise. I'm not going to do a puppet show, although that'd be great.
We'll take a puppet show.
Anytime.
The fact that you can talk and navigate how to share a screen is also very impressive. That's not something in my wheelhouse.
I'm ambidextrous. What can I say? ONDS, this one is still consolidating even after that, what could be perceived as bad news. It is not. You still have amazing volume as it continues to consolidate. Kind of looks like an open door, if you know what I'm saying. So, so this is one that I've been continuing to track. I'm also looking at Lulu and UPS. Lululemon, I went on a tangent the other day here about how I think that there's many reasons why the stock is going to continue lower. So I'm just watching this one after its weak earnings gap down, if we can continue that next break, because clearly that has been a very similar pattern. One that's trending today I saw in StockTwits is UPS. And I'd love to hear from the adults your opinion on this one. It cannot get any love. And this one is making a new local low, at least for
interesting.
At least for the time being. So
is that a like a trend over time, or is that like a sudden? I'm like trying to read
this has been a long trend.
Okay.
UPS cannot look at this.
Yeah.
Yeah.
Well, how is FedEx suffering a similar fate, or do they look different?
Let's check it out. No, FedEx has recovered.
Interesting.
The wheels are still on the wagon in FedEx. UPS though, this one is this one is continuing to be lower. So I'm just curious, and I'll throw it out to your community. I know you guys got a very active community. Why you think this one continues to be lower? As a technical point of view, I would not be buying any dip unless we can find some sort of symmetry to the upside, and we just keep breaking down and down and down.
Interesting. Yeah, let us know if you know what the backstory is there. I did see there was a Bank of America downgrade, but it also impacted FedEx. So that happened this morning. So I don't know what the bigger picture is there. Vaz, I'm curious, when you're kind of going through these charts, you're showing examples of things where I love when you describe it as a jack in the box, and then you have things like this, which is sort of like a slow drip
hangover.
Yeah, which are the most fun for you to sort of dig into and explore? Do you have a preference?
Oh yeah, I like the jack in the box, and whether that's to the upside or the downside, you can have something like Opendoor or ONDS, those types of stocks that have the same sort of consolidation and breakdown to that side. You could see UPS kind of had that, but it's a little more drawn out. So as an options trader, I need to be be quick. I need to be right pretty quickly. So it's a little harder to do on something like UPS and also like a $100 stock. I want to just do a circle back though, Katie, because I believe you mentioned precious metals and you used the word nugget in the same sentence. And
I didn't mean to do that.
oh, it was good. It was good.
I do love Western movies. I have a weird obsession. Like, give me a Western, give me some Gold Rush classic film. But thanks for spotting that. I didn't even realize I did it.
Oh, I mean, you're so witty in general that I just was like, oh, she's just a natural.
Nope.
Well, look at this in silver. Another big consolidation here. Not big I'm sorry, I'm hyperbolizing this. It's a tight consolidation. Silver has been making quite a breakout after breakout quickly. Quick consolidation, breakout, consolidation. This one kind of failed, but as we've been discussing, one of my favorite patterns to trade is when you have something that broke out, failed, and then retook it. It's like, nah, honey, we are back with vengeance. And yeah, really strong activity here in silver. So I think silver is going to 40, and it looks like it's ready to break out pretty quickly in the near term.
Oz, you think the stuff it's got enough catalyst there to get back to its, what was it, 2011 highs?
What, like 70?
I'm not sure. I think the actual metal was like 49 something. It was like $50. I don't know what the ETF was though.
Yep. Here we go. 47. I think silver reached 70 in the 70s. But yeah, you're right. In 2011, we had 47. So I mean, look, silver has definitely had the smackdown, and the fact that it's finally recovering, I think that this one's not just going to get a lot of activity. A lot of eyes are on it now. And will it be a meme stock or a pun stock? No, but it sure is. It sure is technically bullish.
Yeah. The minor piece is interesting too, talking about like signals for people's appetite for risk. Because Bret, you mentioned some people go straight to the source, they do the ETFs, and then you have sort of the speculative. This company is raising money to dig up some stuff somewhere where they think it will be TBD, how long it takes them, how much it costs them, but there might be some stuff there, which I think there's nothing more American than that. But we've had executives from some of these companies on in the past, and I do see a lot of people talking about it. Is that momentum still there with some of these mining players, where people are like, I want to get ahead of this?
Did you see NEM?
I think so. I mean, what's that?
NEM is another great
Newmont?
example.
What's
Yeah.
that one, Voz?
This is Newmont Corporation.
Okay.
Yeah, it's been having a really nice run up too. So throwing it back to Bret, I'll do the chart. You can.
Oh, they're gold mining. Okay, got it.
Yeah.
Interesting. Okay, so you're what you're seeing, Voz, in that one at least, trending up.
Mm-hmm.
Okay, Bret, are you? Is this still going on? I remember hearing a lot about some of these. I want to say early summer. Is it still a thing?
Yeah, I mean from our side, like from our data side, it's going to be more like in the ETF. So like your DDX and your DDXJ, like so the gold miners and the junior gold miners, even some of the like what are the levered ETFs like Dust and Nugget, like those names we'll see pop up like on the when gold had that big breakout day, just maybe 2 weeks ago. We had a lot of activity in some of those groups, but I think the thing people I think, and I myself I was guilty of this, I guess, too, until we did the numbers. But gold has been such a strong performer. Like it's outperformed the S&P 3 of the last 5 years, 4 of the last
Wow.
7, on track again to do it this year. So, and that's with the S&P up more than 20% each of the last 2 years. So, gold's certainly been a spot, like a little honeypot for investors to kind of keep going back to.
Yeah, it's not always the one that people are talking about, but there it is. Turning to some other headlines, we're following. We mentioned briefly the Circle IPO. Obviously, a lot of momentum around blockchain companies. Figure, FIGR will be the ticker. They are debuting on the Nasdaq with a $787 million IPO. I think we're going to see more companies in this space making moves to the public markets, which I think creates an interesting dynamic. These are decentralized finance DeFi companies, but they're playing in the TradFi system with their stock. So FIGR is one we're going to watch in that upsized IPO. We're also tracking some news again in the jobs revisions data that's coming out. I'm curious, just sentiment wise, Bret. I think you mentioned kind of a sort of the data. I wrote down a weakness, but also I think it's also kind of a weirdness in the jobs market, at least just anecdotally. I was thinking the other day, I've never seen so many very not desperate, but just like very dark LinkedIn posts saying, I've been looking for a job for 18 months. I can't pay my, like I've seen the time and time again. It feels more than often that you see more so than usual, than you see those. And on the other side, you see every other week some of these AI companies valuation just continuing to go up, and they're hiring it. So it feels weird. Like it feels like there's a lot of momentum and excitement, and then there's this sort of like dark underbelly. And I'm wondering kind of the sentiment, if there's a sense of kind of how people think about not just their portfolio, but the broader economy. What's the vibe right now that you're picking up?
Quick vibe check. Yeah,
Yeah.
I mean, the jobs, you said weird for the jobs market. Like we were just having a conversation about this yesterday, and like weird was the word we landed
Yeah.
on for it, because it's like it feels like it's like kind of like breaking down. It's like sand in your hands. It's like it's just like flittering away. But at the same time, if you zoomed out and looked at any other scenario where we have like a 4.3% unemployment rate, you'd be like, oh, we're in a good spot. Like we're in a good,
Mm,
healthy. I mean, that's one data point for sure,
yeah.
but like that's generally pretty healthy um, environment for the labor force. But it's gotten so much tougher in the latest. It's really unfortunate that the Fed's last meeting in July was really right before, it was before the big revision, obviously, but it was before we started getting the like the monthly revisions for May and June's numbers were very weak, and it's only gotten weaker since. So we haven't had that chance to hear from Jerome Powell and from the Fed and sort of let them vote on that and how they want to approach that with interest rates. Unfortunately, it was just a bad timing situation. But in terms of how that's affecting investors and their confidence, I was really surprised with our survey we did. So again, that was August 5th through the 19th. Um, Pretty recent numbers, given everything that we've seen, and the confidence numbers were so high, and that had everything to do with ranging from the U.S. economy. Confidence in the U.S. economy doubled from the prior quarter, from 13% to 26% in terms of very confident. So we saw that kind of resurge. We saw confidence in investment goals, confidence in or financial goals, confidence in your portfolios, all that, and
Mm,
not just doing well, like all at our highest numbers we've seen. We do this survey quarterly. We've done it for almost 3 years now, and these are the highest numbers we've ever had. I was really surprised by that, because the narrative that you see with, like you said, like the jobs market, for instance, is not that promising.
yeah.
It's a kind of a downbeat. It's a bad vibe if we go back to a vibe check on it.
Hmm.
So I was surprised to see the confidence that high. I don't know if it's maybe the stock market. Like I know we always say, like I always kind of say when it relates to markets and investing, like nothing changes sentiment like price, right? So
Hmm.
like sentiment can be in the toilet, but if we get this huge rally, all of a sudden everyone's feeling pretty good and bullish. So
Yeah.
maybe all these investors buying that dip in Q1 and Q2, seeing their portfolios with these probably massive moves higher, depending on what they're investing in, but most likely doing pretty well. Maybe that really kind of changed their sentiment on a lot of things and their confidence as well.
Yeah, it's interesting to think about the psychology of it. And I think it is a sort of, it's good now, but caution about the future and like how that impacts something you're doing in the day to day versus looking ahead. Really, really interesting times. Vaz, I want to kick it over back to you and see if there was anything else that we didn't hit on this week yet. I know you've been sharing all of your stuff with us, but is there anything else that's sort of on your radar that you're watching as we wrap up this week here and head into the next?
Oh, it's we're wrapping up
I
already.
know.
Oh, on the heels of your conversation with the consumer and jobs, as a day trader, we like to look at intraday news that is the most important, and you get these awesome intraday releases, like consumer sentiment is one of them. That's one that you want
Mm,
to, if you're in a position make sure that you pay attention to that, because at 10 o'clock, I believe this is going to be on Friday.
Yep.
At 10 o'clock, you could be in a position, you get that print, it can flash you, stop you out of not physically flash you, it can flash print. If only you're that lucky.
University of Michigan consumer sentiment data.
But then, you get stopped out and then you continue back in your position. So that's one just to look out for my day traders out there.
Mm-hmm.
In terms of, there's one more on my watch list, and I'm just curious about Bitcoin. I'm curious where are we going here? I'm looking at IBIT. I like to they have I think for if you're trading Bitcoin, if in my opinion, the best options chain. I mean, the chart looks very bullish, almost as if they're trying to do a little cup and handle perhaps situation right around. We do have some resistance here at the point of control in this cluster, but you have MACD turning higher. You have this nice scooping pattern. You have some obstacles here, but just like, we've been talking about, IBIT in general was supposed to go higher. We did get a little bit of a lapse here, and I'm curious to see. I'm just not ready to jump in on it, but I want to. Everything is setting up. So I don't know if Bret, if you have any opinion on that, or if you guys have saw anything in your community.
Yeah, well, so eToro is a very crypto heavy community that's goes back to its roots. So it's a very active group, especially with these the big names, Bitcoin obviously being kind of the leader in that space. I think when you look at Bitcoin, zoom out to a weekly chart, I think it still looks so clean. I will say we just did some seasonality data on Bitcoin over the last decade. September is its weakest month. So maybe we do have a little bit of, a little bit of choppiness this month to navigate, maybe can creep into October, but October and Q4 are both the best month and the best quarter for Bitcoin. So, maybe, we'll start to see some upside. I'm kind of curious to see how Ethereum will handle moving forward. This name has been on fire over the last couple months. It's been very strong this year. ETH has been great. And I think that chart, is kind of sets up nicely. Maybe you can provide some color on that, but Ethereum's been a fun one those last couple of weeks.
Yeah, Voz, are you watching? Is there an ETF for Ethereum that you typically track?
Yes, it's ETHA, ETHA. I've traded this one before. It is fun to trade. The options are liquid, and there has been, you're right, there's been a lot of interest in ETHA. I will continue to trade this one higher. And the weekly chart, excuse me, I just went into the 5-minute. The weekly chart looks awesome. Let me look at the day chart. I mean, hello, consolidation, ready to break out. ETHA, like silver, ETHA and silver are going to 40. Who gets there first?
Interesting setup between it. Just the parallelisms between the precious metals and the crypto are continuing to be interesting. And we've had guests on the past very into both of those at the same time. So it's not either or anymore. And I think that's sort of the name of the game for investing in general. So as Voz mentioned, we have the Michigan sentiment data coming out tomorrow. Next week, guys, we got a big earnings week. We got Cracker Barrel reporting on Wednesday. So we'll see. We'll see how that one goes. We also have FedEx on Thursday, and Dave and Buster's on Monday if that's your thing. And we'll continue to, of course, ahead of this Fed meeting. It's the 16th and 17th. Continue to track that. Everything else that's going on in the market. Bret, for our viewers who want to dig into this data you guys are pulling on a pretty recurring basis, where's the best place for them to go dive into that?
This is our quarterly retail investor beat survey. We call it RIB for short. We do it 4 times a year. Our latest release just came out this week. So if you were to go to, I can just post it on StockTwits and on Twitter. That'd probably be the easiest way for people to find it at this point. But it's just right on our media page, right on eToro's site.
Love it. Keeping people in suspense. Go follow Bret if you want the link, people. Voz, do you have any big weekend plans ahead? How are you feeling going into next week?
I'm going to be celebrating into FOMC at a Cracker Barrel. I mean, there's just so much going on.
Wait, that's great content. You should do
I
that.
just try to
Bring a
find the closest
monitor.
one.
I mean, if there was, do they have them in Florida?
They apparently do.
Okay. Well, yeah, if there was one near me, I would totally do that. Bring the monitors, just set up shop. It's TikTok gold, I think.
Yeah, sounds
Um,
good.
well, it was lovely to have you with us for most of this week. Of course, you can come on anytime you want. And Bret, always great to see you. Love the insights. So interesting to see kind of the aggregate view. To everyone else, thank you for joining us this week. We'll be back Monday, 9 a.m. Eastern, right here on the Daily Rip Live.